Good turnaround Tuesday, Warriors. Everyone doing okay today? Happy Cyber Tuesday, as the partners have extended it one day because demand has been exceptional. So maybe we hit on something. People want a deal. People want a deal, guys, during the holiday session. How are you, Stephen? So take advantage of it. Today, I'm sure, is the last day. Okay? So you could be prepped going into next year. And, you know, December could be a pretty active month with the Fed and everything. You know, everyone thinks, you know, the pros go away for, you know, they're in Bermuda. You know, they don't go to the Hamptons in the winter. So they're in Bermuda until New Year's Day. But, you know, sometimes during thin market conditions, that's when real volatile moves can happen. So, again, this is the last day. Buy 1 month, get 1 month free. Link is right there for you. And let's talk about what everyone wants to talk about, how to make money. Turnaround Tuesday candidates that I see are the dollar up here. Shot for a reversal in the dollar. I need closes back under 96.90 for intermediate term basis. You'll know the dollar's starting to do something wrong back under 670 or so. These peaks in here. And the grand prize breakdowns under this 96 level. I guess, you know, you could call this a left shoulder head, right shoulder. Symmetry is not good because of this false breakdown, but neckline to me, important support, and to Steve Volge talked about it, is 96. So also went with the euro, and a formation that Blake and I talked about. Blake has it on his charts, was the potential of a pullback towards 113 being a right shoulder. Here's your left. The false breakdown was the head. You have a neckline here, but I'm kind of paying attention to this downtrend channel. And if we could start closing back above 370 or so, you could tack on a 220 point move from there. Is going to take you up to 15.5 or so. So those are my preferred trades. So included in the turnaround Tuesday for a dollar reversal and euro buy could also be the end, which really had a pretty dramatic rally. But, you know, if you believe this falling wedge was real, right, and we never really accomplished objectives here, now we're playing a little bit above the 61.8 level, closes back under 1348.70 on short-term candles. 4 hour, 1 hour will be a sign that momentum is beginning to wane in the end. And why can't we have something like this, which was close to 200 pips from here, that would take you towards 11.5? You know, and if you are considering joining, you're going to have so many great, you know, I went and took a look at some of the active patterns in play. You know, we have 5. Thank you, Amanda. Our webinar is online. Okay, so, you know, Greg likes the euro for an impulsive term. He's given it a lot of room, a lot of breathing space here. Blake doing okay on the long side of Aussie Kiwi. But you're going to get these pattern and plays all the time. Andre is with me on the end. Greg is with me on the end for, you know, some bearish action. Andre's target's closer to what I'm thinking, and Greg is down here at 109. So this could be a good day to fade the dollar, is, I guess, the theme of what I'm talking about today, this morning. Any questions from anybody? Okay. Don't forget to get a hold of our partners who sponsor this webinar for everyone, that so you could come here for free. They just want to talk to traders. A lot of things going on at Forest Park FX, but, you know, we're promoting the rebate program. So if you're outside the US, you could use your rebates for subscribing. And you know what? If you don't want to use the rebates for subscribing and you're overseas and you want to use it for your bank account, that's fine. You know, you don't have to, there's no law that you have to subscribe to get rebates. So talk to Trent and Justin about that. If you're in the US, that's your only option, is to get rebates. What a terrible option to get paid for trading, which a lot of newer traders don't know, that, you know, you come in as an individual, you don't have economies of scale, you can't negotiate with a big broker, but Trent and Justin do with all of these different brokers here. So I recommend you give these guys a call and decide where you want to ride the short side of the dollar with over the coming next few weeks or so. And I believe the metals are up. So we'll see what, if, you know, I was waiting for a little lower, but, you know, think about it. The dollar made new highs last week. Gold's really holding up well. You have to respect it. You know, gold, the dollar made a new high, and while the dollar was making a new high, you know, we were way above, you know, maybe it was the third higher low right here, right? Dollar making new high, while this at the same time, the gold was making its second higher low that it bounced off of pretty good. So I thought there might be a shot back down towards 1212 or so. We'll see. And that's my view. I think there's a decent shot on the short side of the dollar. Pick your poison how you want to trade it. But if the dollar doesn't begin to stall here, and this is something I talked about last week, we're trying to get a little reversal candle, that, you know, if it doesn't stall here, then what happened this week was just another head fake. And I came into last week believing this was real, and talked about during the shortened week looking for places to lay on short dollar positions on a rebound in the dollar. So here we are. So, you know, it's not a surprise to me that we're up here, and I prepared myself psychologically to act on it instead of, well, I think I'll begin to think about shorting the dollar. So that's something else ForexAnalytix could do for you, because you're doing your research and you're planning your trade, and you're planning your trade before the market gets to the levels that you're looking for. Okay, so it's not only the patterns in play, it's all the great research that happens every day, right? Let's see what. So we're looking at this research. This is conventional, basic technical. And, you know, as you can see, you get great research here. You get fundamental analysis here with the technicals. If you don't have patience, which most people don't, to get through all of this, all the takeaways for each individual instrument is to the side of them. And then don't forget the members chat, where you could, you know, watch Amanda and Blake and Steve. If the market's presenting opportunities, they share it with the community, plus the other 100 guys in there and ladies that are in there that trade professionally. And that's a great place to speed up your learning curve and collaborate. You only have 2 eyes. You go into the chat room right now, you'll see 200. Okay? Take a look at the gold oil ratio. Yeah, it's got to be really something with what happened to oil. So you play it by, you know, buying the oil and selling gold now because it's extreme that way. Oh no, Galena, there's more. There's more than one. Go to the, thank you for joining our community. And you just go to the active patterns in play, and, you know, I see it'll show 5 right here. So that's where you find the PIPs, which is an acronym for pattern in play.
Dale, hi, good morning.
Hi, how are you, Dale?
I'm very well, thank you. I just wanted to add, some clients might not be able to see some patterns in play because they are on analysis types that they don't have access to. For example, if you have if you have tier 1, you can't see the ones in harmonics and 88 waves, etc.
I see. Okay, so it depends on your package. Yeah, you know, I'm a believer in the whole package, because every one of the analysts that we have here are award winners. Okay, so, you know, you got to take a look at the team. So, you know, you just have to look at how great the team is. You go back to home, and you know, I would want to have everyone's, but I really think that you're better off having everyone. So you have Blake is your basic technical, BT and candlestick, and Grega, you want Grega's counts. He's also another reason why, you know, I think the dollar's going to come off. And Stelios, who is really one of our best, he is our best fundamentalist for what's happening everywhere in Europe, politically, domestically in different countries. He's our go-to guy, and plus it's trading is very long term if that suits your style. And Steve is become a lot more active in putting out trades, pattern in plays. Now, Joe's in the room all the time, and Joe's a pro. You know, he learned how to trade FX from Blake, who was Blake's last student and mentee. And Joe's been getting interviewed, and you only get interviewed if your stuff is good and compelling on Bloomberg and Real Vision. So Joe is spreading the ForexAnalytix and, you know, our analysis and our views of markets all over. Also, as a member, you get the session an hour before FACE with Paulie Franco. Okay, and Paulie is really, you know, Blake calls him a bulldog because he's, you know, he's always on the job, and he has some great pivots for you to trade with, and goes over the bias chart every morning. Amanda's in our chat room, and everyone has seen Andre's harmonic work, which is effective and almost an art form. So I would consider upgrading your package. And with that being said, here's the CEO of ForexAnalytix, President Blake Morrow.
I hate that. I hate that title.
President?
Yeah. I really do.
Yeah, no, I'll use it all the time.
I don't like to run around saying, "Oh, I'm CEO." And
yeah,
no.
You're the president, CEO, master of the universe.
Blah 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 blah. I'm just a trader. How you doing today?
Good, buddy. So, you know, the euro came down and tagged that level you and I were talking about last week.
Yeah, the euro dollar, you know, it's 113. I mean, it's pretty key, and it's holding right now. I mean, it's holding as of right now. This is a really important support. Actually, Goldman Sachs, they noted that this 113 level was really key yesterday as well in their technical notes, and so it's pretty important. And we came down, tagged it, came, you know, just below the 618. We're basically holding it now, but you know, obviously I'd like to see a move back above 113.50 to get super excited. I've got a small euro long from yesterday, not too far from here, like 10 points higher than where it is. I could have gotten a little bit better entry, but you know, I'm trading in such small positions right now because I'm really unsure of direction. There's really not a whole lot of direction. We have the Fed's Clarita speaking today, which could be a market mover. That's here in the next 15 minutes. We're gonna get a little bit of a, you know, a little bit of a jiggle from that. The cable's weak. Pound came right down to, if this is like triangle support, you know, if we're consolidating here, we came right to the bottom of the triangle. If this consolidation is to play out, you know, we tested some support, but you know, like I said, I'm really unsure of I'm not convinced that the dollar is going to weaken here. I am short some dollars right now. You know, being long the euro, I shorted some US dollar, Norwegian krona, just because we have an ascending wedge. I kind of getting ahead of this trade just a little bit. Like I said, I'm trading really small, and I don't want to get aggressive until I start to see more dollar weakness across the board. But anyway, that's kind of what I'm looking at now. There overnight there was some positive China, U.S. China comments, but they are referencing a conversation back in early November, and you can see like the Aussie, you can see how it spiked up and then came down again because the market realized this is all algo trading. I mean, the algos bought based on what was reported. Then everybody realized it was an older conversation. It came slamming right back down. Kiwi did the same thing. You can see the Kiwi, but the Kiwi's been very strong. I mean, the Kiwi is actually pushing right up against channel resistance. And so if the dollar continues to weaken, you got to keep an eye on the Kiwi here that could break higher. The Aussie too, it could we get above 120 or 72.80. You could probably see a lift in the Aussie as well. We still have a little bit of distance away from there, but the euros, it's a little bid down here. I think we are finding buyers near the 113 level. Now, as far as data goes today, there isn't any. Well, I mean, there's house price index and Case-Shiller house price index as well. And we do have consumer confidence, but mostly pretty minor data sets are being released today. Nothing really too big that should rock the boat. But regardless, we have the euro dollar, which is just testing really key support, and I think that's what everybody, myself included, will be watching today, is to make sure that we get a daily close above 113, and if we do, it's going to continue to be constructive. Let me get rid of that actually, and let's go take a look at the dollar Swiss. The dollar Swiss is very choppy. You can see this. It's very loud in my office. Hold on, we got just a little bit of volatility coming through. Sorry, I'm just I saw numbers flashing around on my other screen, so I wanted to take a look at what that was, and it doesn't seem like it's anything in particular. But we got Swissy here, some very choppy hourly action. The dollar Canadian, failure at the 618, but big trend line support comes in, around the 132 level. This is going to be really key for the bulls to hold on if the dollar Canadian comes back to 132. The US dollar Mexican peso, it looked like we were going to strengthen coming out of this triangle. And so actually, let me redraw this, because I think this is we have to look at it a little differently now. Let me get rid of that arrow, and I think we have to look at it something like this. Okay, which you look at the US dollar Mexican peso, and we're this is a failed rally attempt, obviously. So the risk is if you start breaking back below like 2035, that's gonna really start tripping some stops and hitting some of the traders that have been long. I'm also still keeping an eye on the US dollar Swedish krona. This is another currency pair and let me get rid of this. The RSI has just been consolidating, but we have a really tight consolidation in the US dollar Swedish krona, and this is pretty. I think this is pretty indicative of what we're seeing in the dollar right now. There's no direction. We're hoping for some direction. I'm hoping we're going to get some sort of movement ahead of like the China-US meeting, before the G20 this weekend. But I mean, my expectations are becoming quite low at this point, because we haven't seen any moves thus far. So, but US dollar Norwegian krona, like I said, I'm already starting to inch my way in short here, but I'm not getting too aggressive until we start breaking below that trend line. And if you look at the dollar index as well, failure just above the 618 here. Let me get rid of this, because we held the 38% retracement on the pullback, but you can see that the dollar index is just kind of floundering around. We went above the 618, maybe stopped out some shorts. Also, I guess one of the other things that I should point out, let me grab it really quick. Here's the DSI from last night, and you'll notice here that the dollar index is at 85, which is a pretty high reading for the dollar index, and you can see the euro is at 15, Japanese yen is at 15, Swiss francs at 12. So that suggests that the dollar is the market's pretty optimistic. And pretty bullish. The dollar sentiment's a little extreme, so we might start to see that dollar pull back at some point, and that's kind of what I'm hoping, that the pendulum's going to swing back a little bit. And will that be ultimately bearish for the dollar? I don't know if it's going to be bearish for the dollar at this point, but longer term. But could the dollar see the pullback maybe towards 96.70 or something? I think it's entirely possible. We should also take a look at equities. We held that support that we talked about yesterday. We tried to break 26.70 to the upside, and we got a failed rally attempt yesterday, and this is late in the day. The S&P was actually staging a rally here, and it had reversed. Wait, it was right here, staging a rally yesterday afternoon, and it reversed because Trump had announced he's going to go ahead and push forward with the tariffs, and it came back down. And then it was very limited downside. We tried to push up again today because of those comments that came out from China earlier in European trade. So the S&P spiked up and then came right back down. But I guess what I'm trying to point out here is the S&P is trying to build a base around the support. Now, is the S&P bullish? No, but if you're a bear, are you a little nervous? Probably. And if the market starts to feel some bullish momentum and we start to see some upside in equities, that's the one thing that I talked about yesterday, that if there's one thing that's going to weigh on the dollar, is going to be positive risk appetite. It's not happening at the moment, but what we are seeing is we're seeing a little bit of dollar weakness, even with the stock market, pulling back a little bit here. So if the stock market actually bounces and we see a continued rally from what we saw yesterday, that could potentially weigh on the dollar. And like I said, the euro's pretty firm and down here at 113, and overall the dollar is trying to find some sort of top, and I'm not 100% convinced if that's going to happen or not, but I'm trying to play into it just a little bit. Now, one of the other things that I wanted to bring up just before I pass it over to Steve and Stelios here is gold. I think gold is one of those assets that, as an FX trader, we should probably be paying a little bit closer attention to. And what I'm going to do is I'm going to stretch this trend line out like this. Okay, gold has rejected, and you'll see this fib here. Let me get rid of this longer term fib. I don't want that right now while we're talking. You can see that the rally has stalled at the 618. Maybe even you could argue here that we have a little bit of a rounded top. Okay, and that's all fine and dandy, that gold might be trying to round this top as we approach, or as we test the 618. However, in the event that gold breaks higher through some of these highs, and especially if we start taking out this 1230 level, that is one thing that will tell me that the dollar is set to pull back a little bit. All right, and we are seeing a bit of a dollar pullback here. Hold on,
gold's been leading it, Blake. Dollar made new highs just last week. Look how far gold's off the low.
Yeah,
so, it's been fighting dollar strength forever now.
It has. Gold's been pretty resilient, and that's fairly impressive. And I think that we have to continue to watch gold here, because if gold, you know, shows some signs of life, that could be, you know, maybe the determining factor that weighs on the dollar a little bit. But here's the euro. Euro's, you know, pushing off of that 113 support. The cable got a little bit of a lift. I'm not doing anything with the pound. I'm waiting till December 10th or 11th. Until I really start meddling around with the cable, you know, basically I'll wait for another week and a half. The Aussie's getting a little bit of a lift. The Kiwi is hitting new highs, and the Kiwi is extremely strong. And we do have the RBNZ financial stability report later on today, which you know, the guys in our chat room made note of it, and I will have to agree here that the RBNZ likes to try to talk down the Kiwi if it looks a little strong, especially it doesn't even have to be against the dollar. You look at the Kiwi against other currencies, and with the Aussie New Zealand back down at 106, the RBNZ might try to talk down the Kiwi a little bit, but the RBNZ as of late has said, you know, rates can go up and they can go down. It's like, okay, well, we don't get any, they don't give us much indication at the, have not in recent months. But the Kiwi, you know, is pretty firm at the moment. Let's see what the Swissy's doing. The Swissy, wow, that looks like a nice little rug pull out of the Swissy there. And let's take a look at the dollar yen. The dollar yen has been extremely resilient. This is the, you know, one currency pair that I have not been trading lately. I have not been trading the dollar yen. If you watch the week ahead videos, I, you know, continue to tell you that it is resilient. It's not pulling back when stocks get hit, and if stocks rally, you know, the risk of the dollar yen pushing back up towards 114.50 is pretty high. But I haven't. If I've been looking around going, you know, maybe I want to pick up some euro or some dollar yen down here, I kind of end up missing it personally, and it moves, and I'm like, okay, well, I'll just have to wait for some sort of pullback now. But the dollar yen is, you know, I mean, it's sideways. It's pretty unreadable to me, at least to me. And I think we have to take cues more from equities, and if we see equities really start to rally, then that's gonna give me a much better indication of what to do with the dollar yen, I think. You know, and then I'll start looking at, you know, some.
How do yields look to you, Blake?
You know, they look strong. You know, they're flat today, but if you look at the 10-year yield, let's go over to, I think I have them on here. Maybe I don't.
They're down.
They're down a little bit right at the moment.
No, I mean on your scroller, they're lower.
I think I have them. I have the yields right here.
There you go.
Don't worry, Blake. I have.
Yeah. There we go.
I'll cover the yield. And
thanks. I'll let you continue on. But they're holding up pretty well. I mean, so
well, that's the yen. If they're going to blast the new highs, that's how you get new. You know, the yen.
Yeah, I
continuing
think if we're range bound and the 10-year yield, you know, starts to wrap around and, you know, head higher, I think that's where it is. So
actually, treasuries are actually at a channel of resistance, and at the same time, as you see there in the chart that you have. I think
I gotta, Steve. I've got to let you take over. Clarita's speaking right now, so I got to run.
Okay. Hey, good luck, Blake.
All right, guys.
Bye-bye.
Good luck, and hey, make sure you take advantage of our Cyber Monday deal today, because it's going down in like a couple hours.
3.5 hours left exactly.
All right.
Until
Thanks, guys.
down, actually. Yeah.
Hey, Steve. Before you get going, we had a new subscriber, Galena. And how does she go ahead and upgrade? Because when I was talking pattern and play, she said she only saw one. And Stelia's pointed out to me that perhaps she doesn't have all the coverage. She went to a different level. Do people have a chance to upgrade if they've already done it?
And it's very easy, and they don't even have to lose any money, because the system is built in this way. And then I'm going to cover treasuries and yields, because I want to start by that, because I think that both treasuries and yields are at an extremely critical juncture.
Yeah, I agree.
What you can do is that if you go to settings from the wheel and you go to plans and you choose another plan, then you can actually upgrade to that. And the system will credit back the unused days of your current plan to you. So in essence, you're only going to pay for the difference minus the days that you've already, let's say, consumed in the current plan that you are, and that applies
completely fair and to the customer's advantage. Yeah, nice.
Yeah, you always get credited back the unused days of your current plan, and then you get debited the difference. That's how
Thank
the
you,
system
buddy.
works.
And you
No
had
problem.
one other.
Yes,
Go
Dale.
ahead, Sal.
No, I was just going to say something else. Go on, Dale, and I'll talk after.
Another member's asking if you watch Chavacchio's video. I've interviewed Chris. He's pretty good. Chris Chavacchio. So someone was asking if you had watched it.
No.
Okay. All right.
What was it? The video actually that they linked me the other day, because I did watch it. The one that he was explaining.
He's a stock guy.
Yeah, I think that's the one.
Oh yeah, I did actually watch it. Yeah, he more or less shows the long-term relationship.
Right.
So he's showing the long-term cycles based on the ADR. The ADR, I happened to mention it a few days ago. The ADR is considered one of the best indicators to show you when the market is trending and when the market is not trending. So he was showing back in time and saying that perhaps this is a bull market, that in the long-term charts it's just beginning. So we might have like another 10 plus years of a move higher. So a long-term bull trend that might just in essence be at the beginning, of course, after a pullback or whatever. Personally, although his looking back theory has merit, I do think that in the long run, fundamentals always play a role. And fundamentally speaking, the global economy is currently at a very, very tough situation. And the only way I can see such a prolonged rally in equities is if we actually get an explosion of inflation. So if in essence we get
the only way to deal with the debt to create a bull market in equities is to debase currencies, debasement of currencies. Yeah,
exactly. Okay. So if the rally is sustained just by being in nominal prices and not in real prices, yeah, okay, let's assume that this can happen. In any other type of scenario, I think that we need to focus in the shorter term, and in the shorter term, the next move is lower. And when I say the next move, I don't mean the move that we might see in 2 months from now, but I mean in terms of what is the next big noticeable move that's going to happen. Is it going to be to the upside or the downside? I think I can say with a very high conviction that it's going to be to the downside, even if we first have to, push higher once more. Speaking of equities, and then I'm going to go to Treasury since the conversation came to that. Blake was saying that he's closely monitoring at what's happening with equities, and I totally agree. I showed earlier in the chat room that this is what I had drawn even from the weekend analysis. So I did the weekend analysis. If you were a ForexAnalytix subscriber, this is the chart you would have seen in the weekend analysis, because for me 2690 remains key. So earlier in the day, the S&P got rejected from 2690. So it's quite important for me to see what's going to happen from this 2690 level, because if we actually do get rejected, if today's early day rejection from that level proves to be valid and holds by the end of the day, I think that's bad news if you're looking for a rebound in the short term, because that increases the probability that we're going to see another leg lower first. So 2690 is key. If we actually do clear 2690, then we can get some more choppy price action. Don't forget that, and I showed that, I mentioned that a long time ago, one possible interpretation is for us to get more or less a fractal of what we got in the previous. That's an old chart, as you see. It's while we were still creating like this rebound higher. So the most bullish interpretation we can see here is some kind of fractal nature of what happened after the January crash lower to happen in this case, which means more consolidation before another move higher. So this is the most bullish interpretation that I can come up with. Any other interpretation would call for fresh lows, even if it ends up like eventually we recover. Now, why are treasuries at a very critical juncture and yields, of course, at the same time as well, is because either if you choose to look at the treasuries, the 10-year treasuries, you can see that they are currently stuck for, what is it now, 1, 2, 3, 4, 5. This is the 6th day so far that they're stuck at confluence of resistances. This is like an ascending channel. And as you see, the 61.8 of the last leg lower is also there. And as you see, the 200 daily moving average is also converging. It's almost there as well. So every single day it's converging lower to where we currently are. So double confluence of resistance is almost a triple confluence of resistances here. So if I see rejection from there, that's going to point to more weakness. I'm not saying that's going to happen, but I'm saying that, from a risk reward perspective, being where we are, having got stuck for 5 consecutive days, it is a possibility. Now, on the other hand, we had quite a strong price action prior to that. So this can end up being like a pennant, which then is going to push higher, in which case we should see an extension of this leg higher, almost as equal as this one. So we will know rather soon, because if we break above this 119 and 119.50 area, not 15, you can call it 15 because this is out of 32, right? So it's 15.5 32s, which is almost 1950 if you're counting to cents. So if we do see a break above, then I would expect an extension that would bring us at least to retest this high. But if we get rejected from here, then we should push to new lows. And why do the yields actually confirm that? Simply because this can prove to be either a rectangle, which means that we can end up consolidating a little bit longer. Let me show you. So in one scenario that we break higher in the bonds, something like that might happen here before we get some kind of a resolution. But if we do break lower from here, then we trigger a double top formation, right? Because this is clearly a double top formation. And theory in this case would suggest that we should see an extension equal to the height of this range lower, which means that we should come down and retest this 280 area, which if you zoom out, you're going to see that would more or less mean a retest of the broken trend line, in essence a throwback of the broken neckline of this huge inverted head and shoulders formation in the yields. So very, very critical to see what's going to happen from here, both in yields and in the 10-year bonds themselves. Notes to be actually to be correct. Stelio, up to 10 years they're called notes, and 10 years and above is bonds. I don't remember. Is the defining line in theory the 10-year is included in the bonds, or it's the final denomination of notes?
I don't think there's an exact rule, but it's
there is
10-year notes, and then it's 30-year bonds. So.
Yeah, there is up to 9 months. It's bills. Up to 10 years, it's notes, and above 10 years, it's bonds, actually. So I think that 10 years, to be exact with theory, the last denomination of notes, if I'm not mistaken.
I think you're right, Steve, because when I was 10, and I'd go to school and say the wind blew away my homework, or that my dog ate my homework, my mom had to send notes all the time to the teacher. All right. So, and I was 10. So I think you're right on the depth there, buddy. Did your dog ever eat your homework?
No, but I do remember.
Did the wind blow? It got out of your hand, and the wind blew it away.
I do remember that I did actually have a student in the same class with me that at some point he had actually used that excuse, and I found it so funny. You know, I really didn't believe. I thought it's a myth that somebody can actually end up saying that.
Well, so it's universal. It's used all over the world.
And
okay.
You know, the fun part is that at some point, some poor kid will have actually had the dog eat the homework. But even if that happens to you 1 in a million, you wouldn't even consider saying it because, you know, what are the chances somebody would believe it, right?
Yeah. You'd have to bring your dog in and have him spit it out.
Something like
that. Smartest dog in the universe. Okay.
Yeah, something like that. Okay. So now, having to do with, I know that, and he gave a very good explanation. Actually, I know that Grega is bullish on the DAX, and he showed how this move lower channels very nicely. But I have to say that until I see this so far, what I have here from a basic technical analysis, and you know that I take into account Elliott waves, but on the other hand, I do take into account that there are several complex corrective patterns in Elliott waves. So what can initially look like it's unfolding as a simple ABC, it might end up being, for example, like a double zigzag or whatever, right? So although I do use Elliott waves as a guide, as one of my guides, I cannot also go over the fact that some simple technical formations, basic technical analysis formations, are quite powerful as well. So what do we have here in the DAX? We do have a huge symmetrical and nice head and shoulders being that has been built here. We have a breakdown from there, and what I see in the shorter term chart is a descending triangle. Now, descending triangles do not necessarily break to the downside; they can actually break to the upside as well. But since triangles, you know, as a rule of thumb, statistically speaking, they have a tendency of breaking more often to the direction of the previous move. You know, as long as we remain within the boundaries of this triangle, I will still favor the possibility of a break lower. Now, if we do happen to break above this confluence of resistances, this horizontal resistance area, which so far is rejecting price action, and this triangle's resistance to the upside, then you know, I'm going to be very, very much focused in what's going to happen with the neckline, 11,800, 850, roughly there. And then if we do break above that, then you can even see this formation as a double bottom. So then we will have done two things at the same time. First of all, trigger a bullish formation. Second of all, invalidate a very bearish formation, because the big head and shoulders formation will have get triggered, but in no means will we have reached anywhere close to its target, right? So both of them are bullish signals. I mean, if you invalidate a big bearish pattern, and then if you trigger at the same time a bullish pattern, which is going to be a double bottom, then I will be more focused in the interpretation that this can be a simple ABC, and then I can turn bullish, having a lot more confidence in the DAX. So personally, I'm not against somebody being bullish the DAX, but I would want to see a daily close above 11,850, in which case I think that yes, you have every reason to be looking higher. Now, up until that point, as I said, I will still remain of the opinion that the risks are tilted to the downside, and more or less the same applies to the FTSE, since it stubbornly keeps rejecting. Now today it retested again this 7,100, which is a support resistance zone, got rejected once again. So, you know, as long as it stays below there, I do see the possibility of FTSE producing more downside as well. The RSI profile so far doesn't show us anything different as well. Why? Because as you would have said, Coach, here, we do have a confirmed low here in the RSI, and the rebound has actually brought the RSI roughly at the 50 area, which is what somebody would expect to see in a bearish move. So, you know, the FTSE so far doesn't confirm a bullish move either. And as I said, that does not mean that they cannot turn higher from here, but it means that until you have evidence, you have to keep, you have to stick with the short-term trend, with this multi-day, multi-week now actually trend, which is lower, right? It's short to almost medium term trend now. Because, you know, it's not very well defined. In general, you have four kinds of trends. It's the intraday trend, which personally I couldn't care about any less. For me, for my trading style, it's simply noise. It's a short-term trend, which in general is defined as a few days, right? To, let's say, to several days. Then the medium-term trend, which is, you know, defined as several weeks to a few months, and then anything above a few months, you can, let's say, call it longer term. So now, some interesting pairs for me, USD NOK, third day in a row that's testing this confluence of resistances, this horizontal support resistance area. It's also the 127% extension of this last corrective move lower. I also see this move higher being channeled within this green ascending channel, in which case it would allow for another move higher. Now, on the other hand, we do have a technical breakout of this long-term formation. So, you know, in the short term, the momentum doesn't seem to be strong. But if we do manage to push higher from here, let's say somewhere there, I think that you know, any healthy throwback down to retest this line would probably then create a very nice opportunity, to a very nice risk reward opportunity to try being long once again. Fundamentally, I do like the Norwegian kroner a lot more than I do the dollar, but that doesn't mean in the short to medium term, you know, that has any value, because it doesn't. Right, it has in the long, you know, if you look at the long-term picture, but in the short to medium term, you know, anything can happen. We can have another like push higher out of this formation, get everybody long on a move above 9, and then reverse strongly and actually start like a bear market. You know, so the market is very tricky and usually tries to inflict the maximum amount of pain to the maximum number of participants. That's not due to some satanic nature of the market. It's due more or less to human nature and psychology in the way we tend to trade the markets, right? That's what creates usually this kind of price action, which can be interpreted, you know, in this way. Now, having to do with crude, I'm still long with a cost average of 50, 70. So I'm like 70 cents in the money. I've already moved my stop loss because obviously it's counter trend trading at the moment. But you know, for me to get optimistic that something is happening here, I only have half a position, by the way. In this, I managed to establish only half a position because I had order for lower as well, which didn't get triggered. We need to see a break above this steep descending channel. So until we get a break above this steep descending channel, you know, if you're trading against the trend, you need to do that knowing that it is quite a dangerous thesis. So you need to know exactly what you're doing. You need to know exactly what you're risking, and you need to be very willing to be wrong. Okay. Now, one thing I was showing earlier in the chat room as well, and that's why I keep insisting time and time again how important it is to get in corrective moves, to get a lot of price action for you to have a higher conviction of what's happening, is copper. Why? Because simply that I now feel quite confident that copper has produced enough of a price action to determine that there is a high likelihood that what we're seeing here is a triangle, in which case I would expect that we're going to have a resolution to the downside. Theory and statistical testing have shown that triangles have a tendency of breaking somewhere between like 50 and 80% of the distance between the base. Base is considered the maximum width, so this is the base, to the apex. What is the apex? The apex would be the place at which, if you extend the two trend lines of the triangle, they're going to meet. So let's say there in time. So anywhere between 50% of the time between this place and this place, and 80% of the time, let's say somewhere here, you would expect a breakdown. But it's statistically proven that the best continuation moves come when you get a break anywhere between 60 and 75%. So I would say that would put that somewhere in this vicinity that we've entered now. So I would expect a break somewhere in this area. And if it is to the downside, which is, in my opinion, more likely than to the upside, like 2 out of 3 possibility, I would expect that this would extend at least as much as the base of the triangle, which I think that if it happens somewhere here, would be a very nice fit with my next target, which is the confluence of this horizontal support area and the 61.8 of them move higher, all of them roughly at 245. So I do like copper, and I am looking forward to trading a breakdown in copper if that happens. Okay, I even gave you all the theoretical background of technical analysis. So you do what you wish with that. I'm just giving you numbers and things based on experience. Now, as I've explained plenty of times, nobody's right all the time, and there is no holy grail and magic wand, and nothing works always. That's why at least 50% of our work is doing money management, right? So, you might have a good idea, you might have an idea that that's going to work more often than not, but if you don't apply proper money management, risk management, you might even be right more than 50% of the times and still lose money if you don't let your winners run, and if you don't cut your losses as soon as that your initial idea is not working, without letting your psychology create any kind of bias, like, no, it might turn around, like in a few days or whatever, right? So have a plan and follow it afterwards. Especially, I would advise against moving your stop loss further away from where it was initially. If you want to move your stop in your profit when something is moving, as you planned, I'm all for it. I mean, a trailing stop. If you want to move your target because your idea seems to be working even better than you initially thought, I'm all for it. But don't move your stop loss against what you initially had in mind, because then you're actually skewing the risk reward of what you're planning ahead. This is one of the reasons, and I don't remember if I mentioned that yesterday, that we have decided not only to release a risk management calculator in ForexAnalytix. So the next tool that we're going to release is a risk management calculator, but we've also decided to develop in ForexAnalytix, as part of our services, a trader's journal, because I would very strongly advise all of you, even the most experienced one, to keep a journal of what you're doing with your trades, because that's going to help you to determine what you're doing right so you can do it more often, what you're doing wrong so you can do it less frequently. I think it's a nice way to reflect, on your strengths and weaknesses, and make sure that you execute whatever plan seems to be among your strengths more often, and avoid following trading patterns that seem to be part of your weaknesses. Okay, Now, having to do with the metals, I'm going to be very brief with that because I think that really nothing has changed here. I see two possibilities in gold. We talked about it with Greg as well. He sees the possibility of a double zigzag here. I do as well, as long as we break above this descending intermittent trend line resistance. So, but I want to see this break first. If we do see this, I'm going to very, very, very much like to see a test of the confluence of resistances up here at 1260, 1265 roughly. So that's going to be a very nice target before actually gold rolls over for good, because I do see this as a corrective move, even if we produce one more leg to the upside. But as I said, first we need to take out this descending trend line so I can then be on board with this possibility, right? And at the same time, silver remains the weak sister here. This is another example of a descending triangle. That doesn't mean that it can't break to the upside. As I said, statistically speaking, they usually break to the downside. But you know, when we say usually, I mean it's a 60% possibility, like 65. So there's still a decent possibility that it's going to break higher. The what's going to happen in this case, though, is that besides having a break higher, is that we're also going to trigger a double bottom formation in this case here, right? So this will also help silver extend higher. Obviously, if you have to choose one of the two pairs to belong, since gold keeps overperforming and since gold looks a lot healthier, I would have to say that if we do see a breakdown, you should probably go with silver. I mean, being, you know, and you want to get involved, you should probably be involved with silver. Now, on the other hand, if you do see a rebound higher, you should probably choose to be involved with gold because it looks much healthier and much more likely to produce.
And it lines up with what we were talking about last week in the gold silver ratio.
Yeah, here it is, that it can actually extend higher once more up to that confluence of resistances up there. Yeah, absolutely. It can happen. Yeah.
Oh, and Steve, before you go today, USD NOK and USD SEC look like they're trying to roll over here. If you have time.
I already covered USD NOK. I said that it's on a resistance, but I did not cover USD SEC. So let me say here that I still have a short position in the USD SEC, slightly out of the money now. But let me say something about USD SEC. I don't like the fact that it hasn't broken down yet, because this is let me draw it like this. So this trend line resistance, if we break above 915, this previous high, I'm out, because when I initially started building the position, I saw this move higher as corrective because it's slow, choppy overlapping. But on the other hand, the more time we spend without breaking lower, the higher the likelihood that we're just working out overbought conditions in time, and perhaps there is one more push to the upside before then we see a move lower, and I don't want to be involved with that, right? So I think we're going to know very soon what's going to happen with that. Now, in combination with everything we've already talked about, because the vast majority of those had to do directly or indirectly with the dollar, let me say that still, as we mentioned yesterday with Grega, if you're bullish the dollar, I can understand why, because we're still holding within this ascending channel. But on the other hand, I have to say that, you know, there is a clear lack of momentum, and it looks to me that sooner rather than later there is going to be one more move lower from this channel. So I can't advocate for somebody to be going against the dollar yet, but if we do close below 96 on a daily closing basis, I do think that we might have, there is a high chance that we're going to have a dollar sell-off for at least several days, in which case we might see a relief rally in the vast majority of the assets that are dollar denominated, which might be the occasion that's going to create that leg higher that we're talking about, for example, in gold, or that leg lower in USD NOK, USD SEC, etc. Coach, we do have an interview today. Am I right on that?
Steve?
Yeah.
Oh, okay. Are you through?
We do have an interview. Yeah, we do have an interview.
We do. In fact, what's that designation you're working on, the CFT?
The CMT, Chartered
C
Market Technician.
Oh, CMT. Okay.
Yeah.
All right. Ahmed Amin is with us today, live from Cairo, and he has a lot. Do you know what CETA is? Anyway, I'll ask Ahmed, but it looks like he has multiple certifications. He's in, the Egyptian Society of Technical Analysis, CFT, and CETA. I'm not sure what CETA is, but I'll ask him, and should be a great interview.
Perfect. Perfect.
Yeah.
Enjoy it. Talk to you later.
Right.
Bye-bye.
I hope you feel better, partner. Great job under the weather. No one would know until I just said it. So, Ahmed, I'm going to make you the presenter, or maybe it's Ahmed. I know how to make the ch sound, so you could correct me. I'm looking forward to meeting you, hearing your voice, seeing your screen. Welcome to FACE. So all you do is look at the drop-down menu, and let's see if your mic is enabled here. I don't see a mic. I'm not sure if you called in. There we go. It was up, then it was down.
Make sure that you select the right audio source. There is a panel on the right hand side.
It's trying because I see a green mic pop up and then work.
There is a panel on the right hand side. It has one tab that you can expand, which is called audio.
Mm-hmm.
Now, if you select the proper audio source there, especially the microphone, because so far you haven't, then we will be able to hear you. But so far we have no voice.
Okay. Take your time, relax.
It seems like your microphone is getting connected like for 1 millisecond and then it's going off.
Yeah.
By the way, let me.
Might be the device. He told me he was having some trouble with his device earlier.
If you have a camera, you can even use your camera's microphone for a microphone. That's why I told you to use that. Oh. By the way, let me remind everybody that you have exactly 3 hours for the Cyber Monday offer. So if you're a new member, you have exactly 3 hours to take advantage of that.
Well, looks like we're having technical difficulties here today for this interview.
It seems he has technical difficulties because it seems like his microphone is connecting and disconnected. And we can do something from our side to help him with that, Coach.
Yeah.
Yeah.
We may have to reschedule this one.
Yeah, it seems like your microphone is like getting connected for 1 second and then getting disconnected again.
Yeah. We'll give it another couple minutes. You know what you could try? Try this.
Okay, it's connected now.
It disappeared again. Maybe log out and log back in. Try that one more time. Try that, Ahmed. No, you wouldn't?
I don't think it's a software issue. It has to be a hardware issue from his side, I think.
Okay. Okay, Ahmed. I think we're going to have to reschedule this. And I'll try and work in the schedule sooner since I'm booked through the end of January. I do see your screen coming up here with US dollar yen, but we need your voice. Okay. Ahmed, I'm sorry you had difficulties today, and we see your charts, but need to know your thoughts, need to hear your voice. So we'll just reschedule this, my friend, and maybe you could try a different device next time. Check your mic out, get a headset, something, and I promise you that you'll be back with us. I was looking forward to meeting you. So we'll try this again another day. Everybody have a great day. See you in private member chat. As Steve said, 3 hours left for Cyber Monday. Good hunting the rest of the day. Remember to give Trent and Justin a call at Forest Park FX. And we'll see everyone tomorrow. Ahmed, I'll get a hold of you via Twitter and we'll set up another day. Okay. Hello, Angela. Yes, Angela, if you've had a free trial before, you can take
Angela,
advantage.
actually you cannot on your own, but if you're interested, I can contact them so they can fix that. So if you had a free trial before, theoretically speaking, you can't, but open a ticket to Intercom on the bottom right of the platform. You can see an intercom, a blue button, an intercom button, and they're going to make sure to unflag you as having used the service before, since you have only had a trial, so you can actually take advantage of the offer. Okay.
Oh,
so write to them.
What a sweetheart.
Yeah. So write to them. So either I think Catherine and Max are now on customer support. Either of them is going to help you do that. Okay. Okay.
Okay. Thank you, Steve. All right. Face Warriors, everyone have a great day trading. Remember,
same applies to anybody else that has just done a free trial and wasn't a subscriber before. We can do that for you.
Okay. Beautiful. Don't just count your pips, count your blessings. So you know that we're here to work with you, not just to get you signed up and then leave you on your own. But we're here to support all your efforts, and every day our mission is to build up and edify traders every day. So good luck the rest of the day, everyone. See everyone for tomorrow's session. Adios. Ahmed, I'll get a hold of you on Twitter and we'll try it again another time. Adios, everyone.